Good morning, I'm Zev Fima, research analyst for Action Alerts Plus. I'll be filling in for Catherine Ross this morning. I'm here on the floor of the New York Stock Exchange with senior portfolio analyst for Action Alerts Plus, Jeff Marks. And as a reminder, Jeff will be filling in for Jim Cramer all of this week. Jeff, let's dive right into it. The markets, we're gripped by tariff turmoil. What are you seeing in the markets?
Jim has a very good piece out on Real Money today, where he talks about sort of the certain the trade dynamics going on, and how the U.S. is for the tough stance against China, and how the European trade partners come into play. And Jim has a lot of insight into a lot of what CEOs are saying about what they think on trade. And what he wrote is that even though that it may not be great currently, putting tariffs in place for the economy, we're coming off a 3.2 GDP number in the first quarter.
3.6 unemployment.
And what we had with the tax cuts, back last year, that was a big boost for the corporate bottom line. So, while it may not be exactly, beneficial to the economy, what the view is that now might be the time to do it if you're ever going to do it. And Jim breaks that all out on his Real Money post. So I encourage all of you, if you're not a subscriber to Real Money, check that out, read it. I think there's really good insights there that are really valuable into this market because, it's tough to invest off these headlines back and forth. And I think reading that piece will help you kind of gain clarity into what the actual dynamic is going on right now.
Right, and even politically, he kind of explains what we're sort of seeing on both sides of the aisle, where everyone agrees that this is maybe not the best solution, but it is at least a plan of attack, at least a way to address some of the concerns.
Exactly, and it's why you see the tweets going back and forth, kind of dictating the market moves.
All right, so Jeff, let's switch gears real quick. I just want to bring in Real Money reporter Kevin Curran. Kevin, you're talking about always covering our stock of the day. So today it is Walmart. So they're announcing that they're looking to do one-day delivery. They're looking to hit 75% of the country. What do investors need to know as far as Walmart and the Death Star, Amazon?
Yeah, so I think this was kind of quick response to Amazon. Amazon came out with the next day shipping last week, and they were putting out this idea that they were going to be the most convenient retailer. And I think that it's actually a good thing that now that Walmart has it, they have more infrastructure. And when Amazon has to go and spend $800 million to build out the infrastructure to do next day shipping, maybe Walmart doesn't have to do that type of capital expenditure, and it can now compete on the level of convenience that Amazon has. And that's going to put kind of all of the other retailers in the space behind the eight ball, because if consumers are going to move to a convenience first metric, then Target or Costco or other types of retailers might fall behind as far as not addressing that e-commerce opportunity there.
So then, and Jeff, if you have anything to mention on this, absolutely. But yeah. Kevin was telling me a lot about how, we know Amazon is obviously, it's a tech play. I mean, it's retail, but there's a lot of tech. And Kevin was talking about Walmart's investments in technology. So Kevin, if you could just talk a little bit about the various investments, and then Jeff, maybe what you're seeing as far as Amazon's investments, the cloud, how they're also looking to take on retail.
Yeah, so I mean, e-commerce, I've been tracking it on Walmart for a couple of quarters. It's been going up 40% pretty consistently, and growing on that type of base is very impressive. And I think that, and I go through this on Real Money, where they have the investment in Jet.com, the investment in Flipkart to get into the Indian market, and then also improving the e-commerce in the existing locations in the U.S., where it's obviously quite saturated, in terms of improving their supply chain with blockchain technology, as well as autonomous driving with both Ford and Waymo. So I think that in terms of a staple retail company, they're really moving things forward in e-commerce in a way that's on par with the type of technological advancements that Amazon is making. And I think that's encouraging for longer-term investors.
And Jeff, speaking of technological investments on the Amazon front, we saw that they didn't do it so heavily in Q1, but you had an interesting dynamic as far as the first half in general with Amazon's investments.
Yeah, I mean, just to that point, we saw, the way their guidance actually worked out is that, although it was light on the operating income side, if you split it out, if you parse it out half by half, it was still a beat just given how strong the first quarter was. But I want to go back to the point that Kevin made on infrastructure. And, Amazon has a very unique partnership, out there that I think we can get into this too on our AAP call that's going to follow this. And that's with Kohl's, right? Yeah. So, although that Amazon doesn't have the traditional brick and mortar presence as, say, a Walmart does. They do have this unique partnership with Kohl's where they're using Kohl's stores as a wholesale distributor, as well as a returns program where you can return Amazon-based products to Kohl's stores. And there's optionality here because as part of the expanded agreement from a couple weeks ago, we saw that Amazon was actually given warrants in coal. So, those extend out to a couple more years, and they may choose or may not choose to actually exercise them. But there's ways for them to gain that infrastructure presence to compete with the likes of Walmart on a one-day shopping.
Well, and I do wonder, is that something that's going to come? Is that part of like their longer-term investment plan to maybe exercise warrants to take a stab at Kohl's? And I know that I've talked to some people who thought that was a possibility, after returns, putting more Amazon locations into Kohl's. I think that's one that already has a very firm relationship and would make sense to me.
All right, and then just as a quick reminder, Walmart, again, stock of the day. Kevin Curran's going to be attacking all the angles. But Kevin, really quick, Walmart is set to report earnings Thursday morning before the bell. What's one thing investors should be watching for?
Well, I think it's kind of obvious. I mean, they should be watching for tariff impact. They have global supply chains, and also you have to take into account that they have gas prices rising as well, which is going to impact them. So I think that we really need to hear how much tariffs are hitting them, and I think that that's based on the trading environment that we're in right now, that's going to kind of overshadow a lot of the other commentary that's going to be offered by the company.
All right, now real quick, just because Kevin did mention the gas prices, I just want to also reiterate the dynamic of this is all competition for discretionary dollars, right? After taxes, we take home a certain amount of money. If you are in an area where you're forced to drive and you have to spend more money on gas, obviously that leaves less money for Walmart, Kohl's, Amazon, things like that.
Unless they start getting cars to drive you to the store, but we'll see when that happens.
Waymo partnership there. I'm sure Kevin will be jumping into it. All right, so there you have it on Walmart. Let's switch gears one more time. Let's talk tech real quick because this is really the crosshairs of the tariffs. Not necessarily this round of tariffs, but as far as the 25% on the $325 billion that Trump is threatening potentially in late June. Jeff, for the trust, we have Cisco and Nvidia reporting this week. If you could just give one quick takeaway that people should be keeping an eye on for both these names.
Yeah, I mean, real quick for a takeaway on Cisco, I mean, it's not really, you're not going to have too much of that tariff exposure. They're more of a U.S. company. They're not really based in China. I would say for the stock, it's been on a big run. We actually detailed Cisco much more in detail yesterday during our AAP members only conference call. So if you're interested in Cisco, finding out more about the stock, what we're saying on the stock, what Jim is thinking as well, I would head over to Action Alerts Plus. We'll put out an earnings preview in advance of the quarter too.
And obviously, yes, so earnings preview. And then I'll just mention real quick on the Nvidia front, we're also not, I don't think, expecting too much on this quarter. I've seen some negative revisions to expectations for the quarter, but I think whether they really have succeeded in flushing out the inventory channels, the glut on blocks, Bitcoin mining, and then obviously the adoption of RTX. But Jeff, anything else?
Yeah, precisely. I mean, there was Deutsche Bank was cautious today on the upcoming Nvidia quarter. They're basically citing some PC shortages that we're seeing from Intel come up, some data center spending,
which actually we did see with Amazon in the first quarter. They mentioned that they were pushing out some of the data center spend to the second quarter.
Yep. So again, we're going to be covering Nvidia more over at Action Alerts Plus. So if you're interested on our thoughts on how these dynamics are going to play out, head over there.
All right, Jeff just stole my outro, but that is what we're going to do. So thank you guys so much for joining us, and we're going to continue the conversation over on actionalertsplus.com. See you there.